London Mines and Money 2018, ladies and gentlemen. It's day 4 in the morning, and my first interview partner is Greg Cochran, the CEO of Reward Minerals. Greg, good morning.
Good morning, Jochen. Nice to be here.
Great to have you here, and we met us already yesterday in the exploration pitch battle, which was a kind of experience. Well done, I would say. As you are the first time on our TV show,
Absolutely.
Maybe you can give us a short idea about the company.
Yeah, with pleasure. And might I say that I thought the pitch battle well handled yesterday. It was great fun.
Thank you very
and
much.
I love telling the story. So Reward Minerals was the first company in Australia this century to start looking for potash. And in fact, evaluate a whole lot of potash deposits, sulfate of potash, which is a premium version of potash, and landed on, wait for it, the Lake Disappointment project. So it's not because it's disappointing to us, but it's called Lake Disappointment because the original European discoverer who found it in 1897 called it that because he was hoping for fresh water. Instead of fresh water, he found a 1,200 square kilometer high-grade sulfate of potash brine lake.
Okay, yeah, which is more salty side.
Yes, absolutely.
Fantastic. So you're Western Australia anyway. That's a perfect jurisdiction, I would call it. Also, let's say logistic-wise. You are in pre-feasibility stages now?
We actually, about 4 months ago, we've completed our pre-feasibility study, a very conservative and very detailed approach. My background is large companies, BHP Billiton, Mitsubishi Development, etc. And so I wanted to ensure that we checked all the numbers, we had competitive tenders, etc. So, at the end of the day, a 700-page PFS was delivered. We didn't publish it all, of course, because we don't want to give other people the roadmap on how to do it.
We'll stick that. Maybe you can tell us some key numbers. That would be interesting.
So key numbers, one of the world's largest SOP producers in waiting, 400,000 tons of high-quality product per year, which would be one of the largest outside of China. Very competitive costs. If it was producing today, its free on-board cost would be at the bottom end of the cost curve, around about $250 US per ton, FOB Port Hedland. The PFS had a 25-year mine life. 25-year mine life assessed about 10% of the resource.
Oh, okay.
Which gives you an indication of the size of the deposit. As far as economics are concerned, these sorts of projects are quite, I don't say challenging, but different from an IRR point of view because they have a long gestation period. It takes a long time to actually develop them. But once they're up and running, they almost present like an annuity cash flow. Great margins, 45% EBITDA margin.
Wow.
Really attractive.
What is the selling price of the product?
So currently SOP sells for in the order of $550 to $650 US dollars a ton, depending on where in the world, because the market is really regionally based. So China, the US. The US is the highest price. Japan currently maybe $500 US dollars a ton delivered into Japan. China slightly higher than that.
Wow, fantastic. So that sounds really healthy. And then with that long mine life, even much more, as you said, only 10%. Wow, that's fantastic, I would call it.
Absolutely. That's why I'm so passionate about it. I just think it's great.
Absolutely. No, that's really fine. But question now for me is, what is the capex to build that? And what would be construction time, meaning when you could be in production? I know it's forward-looking statement, but hypothetically, assuming everything goes well.
Yeah, no, and that's a very important question. So we believe we require another 2 years to move through what we're doing at the moment is a value engineering exercise. We're doing improvements on the logistics and improvements on the flow sheet and on some other areas where we think we can improve. The next step is generating an updated resource model and having that qualified as a reserve. All of that's about 2 years to then also complete the definitive feasibility study. Assuming the funding is in place, and that's the PFS number was 450 million Australian dollars.
Okay, but it's manageable, I would say.
It is manageable for a project like this. It would take us 3 years to get into production. So 5 years from today, or from the end of the year. I talk about, this year is already done. So I'm really thinking in terms of 2019.
Yeah, perfect. How would you rate, let's say, longer term, your market perspectives? I mean, potash, I would call it potash, meaning fertilizer, like it's all always used, and we are getting more and more people on this world. So would you say that your market perspectives over the next 5 to 10 years are positive?
Very positive. In fact, there's quite an interesting statistic when you think about sulfate of potash versus the not quite the alternative, but the more common product is potassium chloride. They call it MOP. So MOP is 55 million tons per year, SOP 5 million tons per year. The world's population will grow by about 1 billion people up to 2030. The world's middle class population will grow by about 1.8 billion people in the same time frame.
Okay.
And those 1.8 billion people aspire to eat more like you or I. And that demands higher value citrus and vegetable fruits that require SOP, not MOP. So that's why SOP is growing at a faster rate than MOP, and why we believe it's so much more attractive and also commands a premium.
I see. So very positive perspectives in that sense.
Absolutely, yeah.
Coming back shortly to your project, because when you say you have like 400,000 tons a year on product, this requires top logistics, meaning I could imagine you are using a railway, right? For example.
I wish. Sadly, we're not. So Australia is a wonderful mining environment, and so this is something that I've never seen in Africa. I might be mistaken, but Australia uses what they call road trains in situations like
I know
this.
those super long trucks.
Absolutely. So we would have trucks with 4 trailers, 25 tons per trailer. So 100 tons a load, going 866 kilometers from the project to the coast, and that cost of the logistics onto a ship is about 30% of our FOB cost.
I can imagine.
Which is comparable to other operations such as the MOP producers in Canada, who rail their product 2,000 kilometers to Vancouver. Absolutely.
And then you have to go through the Rockies and whatever. Coming to your financial structure, who are the largest shareholders? What is management share, of course, because it's always important that you have skin in the game, that you are aligned with shareholders, and what is cash in the bank, of course.
So we've got about $4 million in the bank, currently above average cash burn because we're doing this infill drilling program to feed into the resource update. We may be able to last next year on that money because we're anticipating a research and development refund of somewhere between $1.5 and $2 million by mid-year next year. So we've consistently got around $2 million a year for the last 3 or 4 years on this research and development grant. So that, I guess, ticks the box in terms of the work we're doing. Is quite groundbreaking. And we get that benefit, and our shareholders get that benefit because it's non-dilutionary funding.
Exactly,
clearly. As far as our capital structure is concerned, our founder, and he is still an executive director, Mick Ruane, and he's the architect of this business of all potash in Australia. He is our largest shareholder. In fact, he was the biggest contributor to our largest capital raise, and he still holds 31%.
Okay, oh wow.
Then the rest of us, I've bought in since I've joined the company, and so only my first performance rights will be vesting soon, but all the shares I own, and I'm not quite top 20, but I'm almost in the top 20, all bought with after-tax money. And then our chairman is also a significant shareholder as well as one of the other directors.
Perfect. No, for us it's always important that you are really aligned with the shareholders.
Makes total sense.
That you don't walk away and say, okay, I don't care.
No, not there for the salary. It's there for the upside.
Super. Perfect. What would it cost when you do the definitive feasibility study? How much is that?
Excellent question. I'm quite conservative by nature, given my big company experience, and I think there is still quite a lot of work to be done. And I see a number in the region of $10 to $15 million of expenditure. Why so large? Because the actual DFS itself is not that big a number. It's between $1 and $2 million of final engineering work, but it's what feeds into that. It's not only drilling, it's actually, because this is an evaporation pond style operation, we still have what I like to call civil engineering tests to be done on what the best design and construction methodology is for those evaporation ponds. In addition to that, we're in the final stages of crystallizing for want of a better word, a crude potash harvest, which we'll be harvesting and sending to Germany for the next phase, the final phase of the test work, to generate product samples. And that's also quite a costly exercise. But we look to the Germans because the German potash consultancies are world leaders.
That's right. Yeah, we have Kali and Salz also as one of the world market leaders.
Yes, and I've met with them quite a few times.
I see. Very interesting. Super. No, thank you very much. It was really interesting. Good insight into your company. We wish you all the best, and look forward to some good news flow then. I would say get it going, because this world needs more potash for sure, meaning fertilizer, because we become more and more people, and they all have to be fed. Right?
And how's this? Our product will be organically certifiable as well.
That's even better.
So
super.
Thank you so much. It's a great opportunity. Really enjoyed telling the story.
Fantastic. I enjoyed it too. Thank you very much. Merry Christmas.
Thanks all the best.
Ladies and gentlemen, thank you. Ladies and gentlemen, that was Greg Cochran, the CEO of Reward Minerals, and you heard in approximately 3 years it would be possible that they are in production. Approximately 400 million Aussie dollars, 450. Sorry?
You're right.
400 to 450 million Aussie dollars will be the capex for that project. That is absolutely manageable. 400,000 tons a year over 25 years as the initial mine life. That's fantastic. And you heard it. The FOB costs would be $250. Saleable price between 500 to 600. Let's stay conservative here. And I think it's a fantastic project in one of the best locations in the world, Western Australia, with super mining history. I think they have done everything right so far. And they are also financed for next year, which is very important in those markets. I would suggest check out the company. Thanks for watching us. Merry Christmas and bye-bye from London.